Good morning, folks, and welcome back to Almus Market Mornings. The general lack of major data stemming from the US government shutdown continues, but for a change, other regions have been in focus. Yesterday, we discussed about Japan's new leader, but yesterday also saw the French Prime Minister resign. And surprisingly, it seems there is a decreasing trend when it comes to the days served by the French Prime Ministers in office. And this has happened since the snap elections, which actually occurred last year. This, of course, has resulted in the French 10-year yield trading almost 85 basis point higher as compared to the German 10-year yield. Before this snap elections, this used to average around 43 basis points. Let's understand this from JK. Morning, JK. We saw a bout of euro weakness post the updates on the French Prime Minister. How are you seeing this play out? Do you think we can expect some more euro weakness?
Good morning, Swaraj. Yes, I think euro in any case has been trending somewhat down. It's more as a technical correction because market is heavily positioned long in the euro. So I think being last quarter, there's some retracement we always see from the main trend. Coming back to the main event of yesterday, of course, what I saw was a hint of bond market volatility starting right from Japanese time when Takachi was appointed leader of the ruling party, most likely to be the PM. So we had big moves in Japanese stock, nearly 5% up. Again, continuing today, yen weekend beyond 150. Now trending towards 151. 30-year yield hit a new high at 3.29%. Now, more than anything, some of the members of the majority party have even called for BOG to be cautious while raising rates. So another reason for yen to fall. Just for a perspective, Japanese core inflation has held higher than the US for long, while its policy rate is just 0.5% compared to 4.25% in the US. So I think it's a very highly negative real interest rate that yeah, Japan gives, which is a basic fundamental reason for yen weakness. At the same time, their fiscal position is getting worse. Other event, of course, which you also referred to, France, run by a highly fragmented government ever since the suppressed snap election in 2024. So we have seen multiple PMs heading the government since then. The latest PM, of course, appointed in early September, attempted to build a cross-party government, but resigned yesterday, just 27 days after taking office, and merely hours after forming his cabinet, unable to put together a fiscal plan to address the debt with several oppositions to the austerity plan because their debt is running more than 100% of the GDP. So markets were thrown into turmoil. Euro fell by more than 0.7%. French long bond yield went up by 7 basis points. The additional interest rate paid on French debt over the benchmark German bonds, which is the thing that we see whenever we look at the eurozone debt situation, is as high as 88 percentage points. So the French bond yields are 88 basis points higher than the German bonds, closest to the highest level that was seen since the eurozone debt crisis more than a decade ago. That's very significant. Of course, these are not new for Europe. The political uncertainty in various countries, even in Germany, we had for some time, of course, now some stability has returned, although it is not a clear majority government. And France, Italy have always been a center. But then this has got intensified because of the severe fiscal position that they are running. So how this should be addressed going forward, and also whether ECB will take some sort of a easing measure, and that's also one reason why the market is somewhat bearish on the euro, at least in the short term. So as an effect of all this, even the yields in UK, another country with a weak fiscal position, also went up. US yields were somewhat subdued. I mean, did not rise as much as in other countries. Now, the dollar index went up higher. Now, that is not surprising because yen was more than 1.5% higher, and then euro fell almost 0.7% from the highs of the day. Two major currencies contributing to the dollar index, trading well above 98 now. Odds of a breakthrough in the shutdown has been very low. Now, many people are wondering why US shutdown, which should ideally lead to weakness in the dollar, has been actually seeing a strength in the dollar. So, what happens is when the government shut down, we do not know what kind of impact it will have on various segments if it continues. So, maybe the credit flow, maybe the lines of credit, all that. So then it can start to have an impact on the credit markets elsewhere as well. So because dollar is already down, so market tends to play it safe by buying back dollars, and that's what is seen at least in the major currencies right now. Of course, we have other reasons for the dollar to strengthen as well. As of now, EM currencies have not shown major reaction, although they have stopped rising. Even the carry favored currencies like Mexican peso and the South African and the Brazilian currencies are now somewhat stable, not rising further. Although the Japanese yen's sustained weakness can lead to fresh EM, the carry trade as well. Now, in this, India might also stand to benefit because a fresh weakness in the yen could lead to yen INR carry trade, with INR having a good real interest rate, and stock market somewhat stabilizing now after underperforming for quite some time. So, as I said, the dollar has been rising for some time now, but gradually, despite the fact that there is a 94.5% chance of a quarter percent cut in October, 83% in December. All this is well discounted. So there is no major reaction or major reason for the dollar to fall. The rupee, of course, was in a range, a very tight range at the highs of the dollar, near 88.80. That was slightly surprising considering that then some major IPOs have been, ongoing. However, it was also matched with some outflows. So maybe we should take heart from the fact that 8880 was still not broken, and we could see as more money flows, we could see some short-term strength in the INR, as we mentioned yesterday. Nothing to change the trend as such. One heartening fact is that the FI outflow has now become a small trickle. Yesterday it was just 134 crores, and even the previous week was not as high as the earlier. So maybe some interest returns to the Indian market after there is evidence that the Q2 earnings come out better than expected. So, but that's something we need to wait and see. Of course, gold never stops catching the eye. Made a new high once again at 3970, almost 4,000 magical mark that is staring. And then silver is about $1.5 away from the magical 50 mark. We could see some good profit taking at these levels. Nothing to change the trend as such. However, one should be cautious about buying these metals at these levels. Just to mention two other two other financial segments. One is the Bitcoin, which made a new high above 1,25,000. Oil, with a lesser hike in output compared to the previous decisions, saw some short covering. We are also watching the Israel-Hamas ceasefire progress. Reportedly, the first phase has been, positive, as per statement from President Trump. Of course, if there is no final agreement, that can lead to a huge short covering in the oil. In any case, oil prices have fallen so much, and if there is no further output increase, we expect it to stabilize somewhere around current levels. Thank you.
Thank you, JK. And of course, yesterday, after the major moves in politics, we are having some sort of a trickle effects into the other markets. It started with Japan, where the new leader of the LDP was elected on Saturday, and because of the potential fiscal measures could take, we are seeing weakness in yen, as well as the 30-year Japanese yield hit new cycle highs. Now there are also calls on the BOJ to be cautious with respect to raising rates, and these are by the members of the ruling party. So that's something to watch out for. Then, of course, the French Prime Minister resigned just 27 days post taking office. As JK mentioned, it's quite fragmented. The politics over there is quite fragmented. And all of that is resulting in the risk premium being elevated for France. So the French yield trading about 88 basis points higher as compared to the German 10-year yield. So French 10-year higher by 88 basis point as compared to the German 10-year. And as I had mentioned earlier, it used to be around 40, 45 basis points before the snap election last year. Uh, and this is also having trickle effects in other markets. Countries with poor fiscal, like the UK, yields over there also went up. So that's something to watch out for how all of this plays out. When it comes to currencies, JK mentioned an important point that emerging market currencies are not showing much of a strength lately, like they have stopped strengthening. So that's something to watch out for, whether that results in a broader dollar strength. Rupee, in the meanwhile, continued to trade towards the weaker end of the range, close to 88.80. Important point is that FII outflows have also reduced in the last couple of weeks. So that's a trend to watch out for. Gold, of course, made a new high, almost close to, it made a new high at 3970, reaching close to $4,000 mark. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.